So my advice would definitely be negotiate with your bank if you're going directly to your bank, or through your mortgage broker, your advisor. Get them to negotiate on your behalf, because be in no doubt a lot of people are looking at shifting their business in this sort of environment. Well, hello again everybody, welcome to my weekly video. I think it's fair to say that over the past week there has been a slight calming down internationally with regard to concerns about a new banking crisis, but underlying everything there are still some worries about what exactly depositors are going to do with their money in the United States, and of course with the takeover of Credit Suisse in Switzerland by UBS, that's led to some greater concern about European banks as well. Things are still in motion there, but I'm still fairly strongly of the view that we're not looking at a new international financial crisis like we saw in 97-98, or of course the global financial crisis of 2008-2009. The interesting thing, of course, here is for the central banks. They're still fighting inflation at very high rates around the world, but they're just a little bit concerned that because the banking crisis in the United States has been sparked by interest rates rising rapidly and catching out some basically really poorly managed banks, that maybe they just need to pause things for a while, which is what we've seen from the Federal Reserve. They didn't increase interest rates 0.5% as had been expected 2 weeks ago. They only increased by 0.25%. They're probably going to take interest rates higher, and other central banks are also probably going to increase their interest rates further, as we've seen the Bank of England doing 0.25%, the European Central Bank doing 0.5% as well, because of the underlying high inflation. So, curb your enthusiasm for a view of interest rates falling in the very near future, because inflation is basically still much too high here in New Zealand and overseas. Now, of course, in the markets, we have seen some wholesale borrowing costs for banks fall away, but you really need to note that there's amazingly high volatility in those interest rates which banks have to pay in the wholesale interest rates at the moment. And when a bank faces its cost of money for borrowing 1 year fixed to lend 1 year fixed, or borrow 3 years fixed to lend 3 years fixed, going up and down like a yo-yo, they're not really going to feel on very safe ground if they change the fixed mortgage interest rate, because the risk is you could see the wholesale borrowing costs fall away, and then they go and cut their fixed mortgage interest rate that you and I would pay, and all of a sudden things have changed a bit overseas and the borrowing costs have gone back up again, and then they have to increase their interest rate. So it could be a few weeks before we really see things settle down around the world. Before then, we could still easily see some new special mortgage rates being offered by the banks. Remember, as I've been pointing out the past few weeks, there's $170 billion worth of fixed rate mortgages in New Zealand coming up to have their rate renewed in the coming 12 months. Banks have got to have some canny offers at least sitting in the drawer ready to pull out, so they don't lose market share in this environment. So my advice would definitely be negotiate with your bank if you're going directly to your bank, or through your mortgage broker, your advisor. Get them to negotiate on your behalf, because be in no doubt a lot of people are looking at shifting their business in this sort of environment, because people are going from a 3.5% interest rate to 6.5% or something like that. We all feel highly incentivized to have an extra look for a better interest rate out there, or a different lender than would normally be the case if we were only seeing our interest rate go up by half, or 1 or even 1.5%. So overall, still a fairly uncertain environment internationally with regard to exactly where interest rates are going, how rapidly they will come down, and just curb your enthusiasm, like I say, in that regard. And overall, for bank mortgage interest rates in New Zealand, some special deals out there, I think, are sort of behind closed doors, but I wouldn't be expecting a generalized round of decreases, not for a wee while, not until definitely we get some further information from the Reserve Bank on April 5, where they're probably going to increase their official cash rate by another 0.25%. But frankly, they'll have a lot more information for the next review after that, where they do some new economic forecasts, and I think that's about May 22, May 23 or so. So looking forward to that down the track. All the best out there.